Hey fellow trader, welcome to Dean's Dojo. This is my journal. All right, um, as I'm practicing and learning how to trade, I have all the different, like 2K tick chart and my 5 minute chart and all the different methods. And something tricky at the moment is if I'm really only using the 2K tick chart and try to find two-legged pullbacks and all that stuff, I sometimes have trouble like entering, and if I enter I second guess myself all the time and blah 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 because there is so many variables. Like there is plenty of variables, um, and yeah, I mean there are some second entries that I just know they're really good and perfect, but I try to find a way to practice really forcing myself to so to say to enter with a more rigid system. Yeah, so I have a couple of things that I'm working on, but I just want something that is more statistical, to be measured. One way to do this is that I'm still doing, of course, is my journal, um, and another way to do it is to find with the help of indicators. So I really use the indicators or a bit more indicators. It's just a new idea to give me signals in a way, and they mostly occur at good spots anyway. So I'll show you, but then it really helps me, I think. First of all, I want to just go a bit through the week very quickly and show you some advantages and disadvantages from different chart types. So Monday on the 5 minute chart, that was Monday the 23rd of August, and you see I'm going to take my crosshairs away here. You see two big bull bars. That's the beginning, 3:30 here in Europe. That would be just market open in New York, 9:30, right? Two big bull bars closing near their low, their highs, and that is an automatic buy nearly all of the time for a swing trade. And yeah, so that swing trade, like, then you can just sit there and you have your trade, and if it works in your direction, you can add on even, here. Yeah, you can add on a couple times. And when wedges form and then get broken to the upside, you're good, because that's a hallmark of a strong trend, is when wedges get broken out of constantly. And look, the bears do not make any money. Like there is no bear bars, and if there is one, they don't make money. So the bears, they don't make money until here, basically. That's it. But again, I think I exited at something above 10 points or so, because I thought, okay, 10 points is enough. It's like 1 2. Well, I mean, I could have held on longer, but never mind. So that's a very big advantage of the 5 minute chart, is you can capture the big trends. Okay, and on the 2K chart, you may be sitting there waiting for a two-legged pullback or an entry trigger or so, and you don't get it. Maybe. Okay, then Tuesday, I could jump over. I think wasn't too bad, but it wasn't too eventful. But something I wanted to talk about is like a pretty bad day where I was stubborn, and that was Wednesday, the 25th of August. Also here my crosshairs are annoying, and the point is that I didn't have this upward channel, of course, in the beginning, and I was thinking, strong up, strong down, confusion, like it looks like triangle-ish, so wedge shape, sitting on my hands, don't do anything. But then it came to the overnight high resistance here, and then I thought, okay, nice, now I have to play the failed breakouts, right? The point is, this is not yet, like, it's not really yet a failed breakout, this one, right? I mean, plus it is into a strong up move. But then again, this up move could be like very steep and already have broken and made a new high in one bar. If it worked, you could invent all of that. That's the point. You can always like make your channel a bit more narrow or not. At least at my stage of development. But you can say it didn't break out fully because it's just a double top. On the other hand, if it surged down, you would, pat yourself on the shoulder and say, well played, sir. So yeah, I guess that's okay. Then the real failed, and I took that too. I took this one because it's bearish enough for me and it is a failed breakout. Plus now really everything played out, right? It's like, and I think my 2 points were down here at this, so it got touched. And when it shot up again, I skunked the trade. It's exactly the same as Thomas did, I think. He entered after the lower high and he skunked the trade as well, and it would have worked for both of us. But then, and now looking at it, of course, if it doesn't go down from this moment and it shoots up again above the EMA, you know something is wrong. And I stayed stubborn and said, this is a failed breakout. Like, yeah, now here's a failed breakout. I think I entered twice more in this mess here. Even though I know, like, prices, they couldn't close below the EMA. And this is like a breakout pullback even. So this is not good. Up to here, it's all good. But then I don't get that, I have one loser and one that I skunked, which is maybe a little mistake. But the loser wasn't really a big mistake. And this one for sure wasn't a mistake. That was well played. And that this is okay. I have to just, afterwards come the mistakes. Okay, so that was being very stubborn and, so I could just let go of that. Then I had to leave anyway. But that wasn't a good day. Then next day I have to show something because it's one of my really favorite patterns in the world, and it's the 3 push higher above from the EMA. I talk about it often. So the point is that price action wise, it has to suit your direction. We had a big surge down, so I expect a possible second surge down later on. We have a strong move up that clearly played out up here, right? So this is for me very clear, and there I agree with all price action channels and stuff. You see a strong leg up, a break, and a move to a new high. So now we see, even if you don't have this big channel, right, because that's just additional fuel for that. I see one push up, I make it bigger and I mark it. So this is the first push up, right? So it comes from down here, one. Pull back, so the high has to go lower. Second push up. Then again we have a distinct pivot and the third push up. And that's it. I mean, that's the pattern. And when the closes stay more or less on the same level, I'm good to go. And it is always scary, right? Because you think, oh, it's congestive looking, but really these 3 pushes, and I'm very specific about them. Again, they cannot be like on one line without the bar going down. So I need this trough here. I need 1, 2. So basically 1, 2, 3. It's like a baby head and shoulders, actually. Just thinking of that now. But yeah, doesn't matter. Anyway, and what I did was, I think I entered with 3 contracts or something, and I only took 1 out. I don't know. Or for some reason I had 2 contracts that I left for runner because I felt so yes, I think it was that. Because I had this additional confirmation of this big channel. And the midline works really well here and here. So I was just saying, if I'm correct, and everything is as I think, like the big channel is really in play. It starts here. It's really in play. Plus, we had a big leg down. We can get just another one down, at least to test, because there was even this channel that didn't get retested yet. So then I thought, why should I only scalp out now? If I'm so, then I took a swing trade, basically. And it worked out, and I went down to 68.50. So that's here somewhere. From here, so that's more than 10 points with 2 contracts on the MES. I don't know, if it didn't work, I'll probably say, you should always scalp. But I take full responsibility for that one because I saw so many good things. It was not just a shot in the blue, I saw many things. Probably even some fibs, you could for sure put some fibs on here and find. Well, it's just at the 50. It's not yet at the 61.8, but I want to see it. Not yet there, but then if we measure it from From here it's already broken. The fibs don't really help here from yesterday. See, like this you can always find the 61.8. Anyway, my point is I had many good reasons for it to retest the low, and it did. Okay, and the good thing is I left. I put it on, took my scalp, had to stop one tick above. It didn't eat me, and then I left. You know. Good. And now we come to the new thing. First of all, I want to say again, like, well played, Thomas Wade. Like, he is, as always, he has great traits, and I'm astonished that he has the same traits, the good ones only. He has the same loser as me, but I have many other losers. But I also have one winner that he had a loser. that was a funny one because I was watching Bye Bye Money stream, this panda dude. I mean, he's entertaining and all, and he has, you know, like it. If you're a total beginner, don't watch it. I would say, just don't, because. But if you're medium, like me, like I would say I'm medium. I'm not a total beginner, and I know all the struggles, so I see it all in him. So that's good, you know, like all the sudden tilts that you suddenly need to jump into another trade, and you know it's shit. Like everyone watching the stream probably says, don't do that. And if it works out, then he finds a reason why it did on his like 10K chart, a 5-minute chart, all of that. And if it doesn't work, yeah, I don't know, he reverses the position and it makes it even worse. And yeah, but I'm not saying that he's, you know, I'm not blaming him for anything. I think it's entertaining that he does that. And I learned something a bit from it. And also I learned to really stick to my reads, you know, not to get influenced. I'm not always watching it, but sometimes. So here, we had, what I saw was a big up move overnight. Like, just pretty strong. Plus, I already put the SMA on the 50 from my good friend Patrick. I really like it. I put it back on because it helps me. I need crutches, you know. Okay, so in my eyes, as long as the SMA is angling up, there is no short trade to be taken for sure. And as long as the EMA is not crossing the SMA, also not really. Okay, so for me, I was not thinking short, but also I was not thinking short because we had this strong up leg. Yes, it played out, fair enough, but still, you know. Thomas also took this second entry short and got stopped out, but he said he at least had a reason, like from, he said he plays it as a range, but even then it's entering in the middle of the range, and I didn't see a range. Like, for me it was just, yes, we have a support down here for sure, but we are not even back to the overnight highs. So for me, shorting here is out of the question. And when I saw Bye Money shorting there, and it just formed a nice higher low, or a double bottom, I jumped in on the other side. And honestly also because I added from day beginning, market open, I added the Fibonacci's. You know, it could have just as well gone wrong, but my point is, look, it's from the golden, from 61.8, it has a double bottom there. So that's just additional reason to not take a 1-point scalp. That would be bad. It's not good to take only 1-point scalps for beginners. It's just not good. And also for intermediate. You have peace of mind if you can take at least 1-to-1. And I took much more. My target was up here, of course, because I said I played a fib up here, which it would have worked exactly. But somewhere here I exited. But with, you know, 4 points for sure. It was 4 points. And not just 1 point. I think this is the main problem. I can't imagine. I would be nowhere. Like, I would be devastated if I only took 1 point there all the time. Okay, anyway. The Fed meeting here, that's anyway horrible. Okay, so the new thing now is that I try out, and I already like tested 1 month, but I'm gonna do like all the months and of a strategy with an RSI. Not sure if it has a name, but I saw it in a video, and I thought, why not just back test it a little bit, and then try it out and see how you feel, because it generates clear signals that you can just follow. And then you can say, does it work or doesn't it work, you know, but you have pretty clear and concise rules. And here is what for this day I found. So first of all, the strategy. I take a 50 SMA, that's the 50, the golden SMA, and of course the 21 EMA. This is what I learned from Patrick last year, that the 50 SMA is like, it's well known also, it's like an intermediate time trend indicator. If it's angling up, the trend is probably up. If it's flat, it could be rangy, like here. And if it's down, it's a downtrend. Okay, and also the location of the EMA, of the shorter relative to the longer period moving average. If the shorter period moving average is above the longer one, then it's also much more likely to be in an uptrend. And the rule is do not short as long as this line is above this line. And it's good to have this visual thing, because it's like a or steering wheel, or how do you say, like extra wheels on your bike. When you learn to ride your bike, you just know, I cannot short. Like, for sure I wouldn't pick a top here, but I don't know, if someone is a bit less experienced and just picks all the tops, if they have this one rule, this above this, no short in, they don't pick tops. Okay, and then the rule is, we have an RSI, which is here, I'll show you the indicator. It's this RSI, an 8 period with a smoothing of 3. I just chose the 3, and I'm just gonna try it out with that. Maybe I have to change it a little bit, but so far I think it works pretty well. And you add a 40 and a 60 line. So one line is 40 and the other 60. And the whole point is, it's a trend following system. It's a trend following indicator. So basically it says, it's not overbought or oversold indicator. It can be used as that, but how I use it, not. If we are in an uptrend, and you can have that in many different opinions, you can say, I have a channel, that's why I'm in an uptrend. But I say, if the SMA is angling up and my EMA is above it, this is an uptrend. Then, if then the RSI comes back down below the 40, but not lower than the 20 or something, so just below the 40, the moment it turns up again, and you have a good bar, you can enter long. And the whole point is, how much profit do you take in regards to your risk? And I think this is with every strategy. This is the thing. If you have a good risk to reward, you can try that out and you can make it profitable, I'm pretty sure. So I went for, like, good would be 4-1. I really wanted 4-1. But then, like, if it was at 3-1, I could already exit. And this is something I agree I have to tweak and fix really clearly. Maybe I'm going to go for 2-1, because that's already good enough. But maybe I'm more comfortable even with 4-1. It depends on your personality. And I just really took it blindly. Here was the first time, and I could make a rule that I cannot have a stop that's bigger than 4 points, because here I couldn't enter above that bar yet. Because, do you see down there at the RSI, we're still below the 40. On the next bar, we also didn't break the 40. What happened then is we had a little trap, and it went up again, and then we broke above the 40. So I really entered up here, which I think is too big of a stop. And I think this could become a rule, but I do not tweak around right now. I just follow the rule. Then we had it again below the 40, and here it started angling up, so I entered. And do you see that? Like, it just works. Or, I mean, it just works. Of course, sometimes it works. But my point is, if I enter here, my stop is here. If I only want 2-1, I have it in that move already. If I want 3-1, I have it at the end of the move. And if I'm really going for 4-1 and leave the computer, I'm gonna get it this time. And if you have 4-1, you can go wrong 3 times. Well, 4 times, but then you don't make money. Okay, so that's great. And then you're confident, like, yes, you make mistakes, but then it's okay to make mistakes when you get big winners afterwards. Okay, then comes this second entry long that I also took, And I was right with my assessment that it's a strong trend and we have to take every entry that is with trend somehow in any of our systems. So this was price action wise, got stopped out. Then I made, this is tilt. This is just pure bad because I wanted to go for above this bar, above the next green bar. If it triggered, I would be okay with it because it would be a candle swing, like, and I would go for 2 to 1. But that's something else. But here it's just bad. Don't talk about it. It was just bad. I don't want to talk about this now. Like, then next we had again this setup. So we are here. The RSI touches the 40, which is good enough. And on the next bar, I entered and I got stopped out. But then again, I have to re-enter here. Plus, I had the trend line at that time already, so I knew this is perfect. And 4 to 1 works again. I can show you. I enter after the green bar here, stop is here, and I think 4 to 1 at the end of the day would have worked. Yeah, 509.25. I was just, yeah, I was there. You would have to wait for a long time, which you probably wouldn't if you don't just go out. And the last trade is the nice second entry long off the trend line. I took that too. So the whole benefit already, I don't care about these little tilts or whatever right now. The whole benefit is already that I just enter and I teach myself to force myself to enter. Again, kudos to Thomas Waite, because one thing that is so cool is that the price action, it tells you the exact same thing, but it keeps you even out of that one trade because you see the downtrend didn't break and make a new low yet. But on the other hand, you could also, if this one worked, you would say, well, it was an overshoot. An overshoot sometimes just reverse, And here, for example, this one he couldn't take because you would think we're still in this big channel. But apparently this big channel was absolutely nothing. It didn't care, the market, and you cannot know this. While maybe after a while you think, okay, it's better to always let any channel play out, but I cannot do that right now because it's too many variables. I need to have one system here with very few variables. And yeah, that's what I try to do for now and try to figure it out. I'm also going to do all the price action stuff if I'm very sure about a setup. Like this, I was very confident. This second entry I was very confident about. One failed, one didn't. But the point is, also in this second entry, because it was off the trend line, I took more than 2 points. I took, I think, up to here 7, so that's like 6 points or something. Yeah, that's all, I guess. I'll see how it works with targets and all of that. But for sure you can sleep better if you go at least for 1 to 1. Like 1 to 1 for me is still, it's just the edge of profitability. 2 to 1 is better, and if you can go for more, then you can sleep much better because you can make some losers and are not afraid. You don't get afraid of losers. Okay, so I guess that's all, and I'm gonna try out that one strategy. I looked at many of these RSI things, but some are not good, some are just plain wrong. For example, there is this saying that you can draw trend lines on the RSI as well, and I agree, it looks cool. Like I can draw from here a trend. Can't I draw in here? No, it doesn't seem so. That's a bit weird. Okay, well, whatever. Yeah, you can draw trend lines, and they say when it breaks, you jump in. But do you see what happens? Also, like with the price action rules, trend line break and it makes a new low. And that happens all the time. Trend line breaks and tries to make a new low, and it makes a new low in price, huh? Okay, anyway, so that's an RSI strategy that I'm trying out with the main benefit to force myself to enter on like mechanical signals, Yes, that's much better than being always wary about, what you want to do. And because with price action, you can find so many reasons not to enter or so many reasons to enter, right? And the other point which I want to make a video about is the divergences, the lane divergence, which I abandoned for some reasons, but it is similar to that. It's a very clear signal, and I also want to do that now, to just mechanically take these with little variables as possible. Yes, because I'm also now studying the Trading in the Zone from Mark Douglas, and well, I'm just in the beginning, but I'm pretty sure that he says it's not absolutely necessary to study the market so hard, that you know what every tick means. That's Al Brooks, and it's good. It's like a good knowledge. But don't think that this will save you, that this will be the holy grail. It's much better to have a simple system, relatively, with a good risk to reward, but that you follow, and you're not afraid, and you don't feel anxious or anything. Anyway, that's enough talk, and I hope you're having a good day. About the divergences, I really want to make a video. And even though price action traders, they hate all the indicators, and I fluctuate between no indicators, or yeah, they do help. Right now, I'm again in the part where I use them as, little wheels on my little bicycle to improve something in me, namely to trust a setup and to just go in and just take trades. Okay, so have a great day, and see you next time. Bye bye.